Hi, this is Chris Buss with Traders Profit Compass with a mid-session update for Thursday, September 3rd. It's 11:45 as I start the video. Okay, before I get into the charts, I just want to share a couple thoughts with you. We knew it was going to end, okay? We, or at least I, had been anticipating this, and I think I shared that with you, that I didn't want to go out in time with a lot of premium. I wanted to play it close to the vest, figuring that the day would come, but participate in the upside until it ended. For me, I've seen enough this morning to say that day has come, so I've stepped aside. I've closed all my longs. And regardless of whatever bounce that they put in today, and I do expect a bounce, we're seeing that right now. We're heading into a 3-day weekend. I don't see tomorrow as being some big risk-on moment where everybody's going to load up again and think that this corrective activity is over. So discretion's the better part of valor. Yes, I was disappointed to put on a couple trades yesterday. I'm glad I rolled the Twitter and took that off the table. So, anyways, let's look at the charts. Let's look at the levels. And I think at this moment, especially if you're long a significant amount, it's easy to get panicky. But what I like to do in moments like these is just focus on the levels, look where bounces might happen, look at the support levels below, and create a little game plan for if this, then that. I think you've seen enough and heard enough from me so far is I don't try to pin big bullish themes or bearish themes to my narrative. I like to go by levels. If levels hold and things stabilize, we can go back to a more constructive posture. If they don't, then we need to have our posture be accordingly either flat or bearish, depending on what levels hold and which levels break. So that's how I'm approaching this moment. Let's get into the charts and look at those levels. Okay, I've zoomed out to the daily. I imagine that if you're a swing trader, you're probably trading the daily time frame. We've got this nice rising channel. We poked the top of that channel yesterday, and it was rejected firmly. Okay, we broke this intermediate trend line that I had dropped in. We've come down to the 20, and now we're bouncing. Okay, as long as this 342, 340 area holds today and tomorrow, the uptrend is intact. If this level breaks the channel, then we've got a confirmed daily sell signal. And that would be a signal to get more bearish, look for a move down to the 50, down here at 330, and we'll take it from there. And I will, in the hours and certainly overnight, I will give you downside targets should that break. But if you're in the daily time frame, we're still within the channel, and you can still be, relatively bullish because we don't have a daily sell signal. So let's drill down. 2-hour charts. We've held the line here at 348 after a look below. So I would say on this time frame, be certainly cautious. We may see more selling into the afternoon, or they may, pop it inside the channel. And you know how this thing goes. They don't make it easy. So they may park it today right on this channel line and leave us guessing until the morning. But with this impulsive bar, I wouldn't imagine, like I said, tomorrow, heading into a 3-day weekend, that everybody's going to rush in. In the option market, I've seen a lot more put buying. There are a few traders, institutional traders, that are simply positioning for a bounce into tomorrow. But that's fine. I mean, you'd expect that. Things don't go down, in a straight line. They'll bounce it and then maybe at this 351 level, reject it and pull back down. So, but as we stand now, it's held the line at this 348 level. And so we can't get extremely bearish at this particular moment. Okay? We've seen enough to not be bullish, but we can't, I don't want to personally go overboard on put buying with the daily inside the channel and the 2 hour still basically within and holding the line. So let's go down to the 30-minute chart and see what we've got. Here's your bounce bar. What I've done is drop in the Fibonacci retracement levels from the high of yesterday to the low of today. So in this short time frame, I wouldn't be surprised if they bounced it up to this 350 or this, the 350 level where it gets rejected and they sell in the afternoon. It could go as high as 351.50, in this area. That would be a 50% retracement. That wouldn't be at all unusual. So, if you've been an active trader and you saw these levels drop, into the gap and below, maybe you took some puts there. That would be the smart thing to do if you're active. If not, in this area is where I was exiting longs. So just to go flat, and now we'll just see how far the bounce carries us. I don't think it would be a bad idea if we got a big bounce to position some shorts, up in these levels here, planning on seeing a rejection, because that's what I would anticipate. A bounce and then a rejection, but you got to get the evidence first. You can't just, go off firing. Wait till you see a rejection, and then you can set a stop just above if you're an active trader. So these are the levels. This 346.50, if we were to break that this afternoon, I would anticipate coming down here to 343. I mean, that's just the next level. So that would be a downside target for today. And that's probably going to take the NASDAQ to lead to the downside like it's been doing so far today. So there's where we stand on SPY. Let's get into the NASDAQ. We had the channel touch. This is the daily chart. We had the channel touch on the high yesterday. And then we had the gap down this morning on this rejection. We've come down to the daily pivot at the 20 EMA, and that is held, and they're putting in a bounce. We've got the midpoint of the channel here. As long as we stay below, then I would anticipate coming down and at least testing the downside of the channel down around 285. And then we'll decide, or price will decide, if that support level breaks, and then we'd be looking for the 50 EMA down here at 270. And it doesn't look like it on the charts because it's compressed because of the run up. But, 285 to 270, that's real money. You want to be on the right side of that trade. And I think the air is coming out of tech right now. I think that's pretty clear. How far it comes out and how far they take it remains to be seen. But the 20 EMA is held, and we're getting a bounce. Let's go down and look at the 2-hour channel or 2-hour uptrend line. That's clearly broken. We've come down here to 290. This is a look below and fail, and now they've brought it back up to this support level at 290. Now, this afternoon, that would be a level to key off of. You know, if we were to break back down below on the following candles, I would at least expect them to retest this low down at whatever it is, 286 level, and possibly take it to 284. Okay, that's on the 2-hour time frame. That's hard to trade actively, but if you're kind of in an intermediate time frame look, you know, between the daily and short time frames, this is a good reference level to watch, 290. Zooming down to the 30-minute chart. So we gapped down, we took the plunge, and this gap support at 287 was tagged and held, and then they've bounced it up here again to this 290 level. And should that fail, then back down towards the gap, and depending on how, you know, the pressure on the selling goes, then it may come back here simply to test the low. That would be a common technical move. Or if selling intensifies, filling this gap down to 286 or 285, 86, right in that range. So, potential bounce up here to 293 to 295. I would expect that to get rejected if it makes it that far, and then to come back down. And that may happen over the course of this afternoon or tomorrow, but I believe they test this low by tomorrow at the close. I can't see, and maybe that's why it'll happen, because I can't see it. You know, that's how it goes. But I can't see everybody jumping in on a Friday before a 3-day weekend after this rug pull and, you know, gunning it. It could happen, you know, take it level by level, but I don't see that. I see them either coming back down today or bouncing it in the afternoon and coming back down tomorrow to test this. If you get a nice bounce this afternoon and you're an active trader and you see at one of these resistance levels, Fibonacci levels, if you see a rejection, then you can, you know, position yourself with some short-term puts and then look for the down move. That's how I would play that. Don't buy puts down in here. You know, that's shorting into the hole. After you get that retest, I would be covering and then pick it up either tomorrow or Monday to see how it goes, or excuse me, Tuesday to see how it goes after the holiday. I wouldn't be carrying, you know, certainly long exposure over the weekend. If you see tomorrow, if we see heavy selling, that's usually, it doesn't end on a Friday. There'll be some follow-up selling on a Tuesday, I would imagine. So, but get your puts on a bounce, not down here. There's just no margin for error there. The premiums are going to be elevated. So you need to be patient and see if you get a bounce. Let's look at IWM. This is a live chart. Let's see. This 155, this is a 4-hour chart. This 155 is a key level. We had been chopping between 155 and 160 for weeks. Couldn't break it. Now they pulled the rug and below 155. As long as it stays below 155, I think it's vulnerable down here to 150. So keep that in the crosshairs. They may try to bounce it above 155, but if you see that bounce fail at either 155 or just above, I think you can position for downside towards 150. Let's look at the 30-minute chart. Again, whenever there's a big impulsive move, I like to drop the fibs in. They're very informative and useful. So here, look at how this works. We had the high yesterday. We had this back off into the close, and then they pulled the rug this morning. We had this 153 penciled in for months. Came down with a perfect tag and bounced it back to 155, and now they're selling again. So in your active trading, use these tools to inform your decision making. Had you been short or got short, this was a great place to cover on that initial tag of 153. And if we already zoomed out, the real support is at 150. This is an intermediate level at 153. So impulsive move down to a pre-identified support level at 153. Got a 38% fib bounce and was rejected to the penny. You see the wick there to the penny, 155.27, and then back below this resistance level at 155. If you're short, or if you got short in this area, you can stay short against 155 and then look for either a retag of 153 or a break below towards 150. That's how I would play that. Let's just move on to some of the other things and take a quick look at FAAMG. Of course, with equity selling off, you're going to get a bounce, and TLT came right up to this level, to the penny, 167.25, and was rejected from that. Still up on the day, but off the highs. So there's TLT. Gold down. When you get these down impulsive moves, these liquidation breaks, all the asset correlations go to 1. As we saw in March, it didn't matter if it was gold, silver, gold miners, everything sold off. And that's what we've seen here. So no matter what it is, when you get these risk-off moments, they're not going to pile into gold. They're going to raise cash just in case, like they did in March. It was a lot more dramatic than that, than this occurrence, but we don't know if it's done yet. And traders have memories. They remember. And at these, elevated levels in equities, there's probably a lot of people saying, is this just the beginning? And I'm going to be safe than sorry. And so they dump whatever they've got, No matter if it's gold, whatever, they dump it. And that's what you're seeing here. Miners aren't that bad. Silver, rug pull. Facebook has broken support down here in the middle of the range. If you're an active trader and you see this bounce into 292.30 that fails, and I would expect it to fail, then you can initiate a fresh short position with a tight stop above and look for this move down towards 280. Apple has held the line here at 123. Look below and fail, but that's got to hold, or we're coming down to 119 here. There's a minor level of support, not a lot. Probably expected to come into this 115 area. Okay. Not a place to short right here. We've got a large volume over price bar here, and that makes it even more important. I don't have it marked, but notice the big price void right here below this level, below this 123 level. Should that break, and really break, not just, a few cents, but if you see a break, it's going to come down in here towards this 114 to 116 area where there's more support, and then see if it can stabilize. Amazon, big rug pull. Again, look at the touches. Look at the touches where it goes right to these pre-identified levels. This gap down, is always a signal. But this loss, this was your real trade right here. This loss of 34.50, that was, if you're an active trader and you're into Amazon and you're on your toes and you're comfortable with it, that was a short. Re-entered the old trading range. Target's always the bottom of the box, which it found, which it broke, and came down here for a tag of this 33.25 area. Then they're bouncing it. The key level to reclaim on Amazon is this 3,400. If they can reclaim that and it doesn't get rejected, then that's a level to watch. I would expect, I haven't dropped the fibs in here, but I would expect if this risk off moment extends into tomorrow, I would expect this area here to be rejected and come down for a double tap of this 33.35 area. Microsoft, as I think we discussed this morning, we thought that this would fail. It did. You're just in your active trading, break out above the range, move back into the range is a bearish move. Bottom of the box is your first target, which it found and broke into this price void, comes down to this minor support level that was identified, broke, came down to the trend line, and held. So as long as this holds 218, it's a new trader, a fresh money trader that thinks there's going to be a bounce could put an objective long in against this trend line and see if he gets a bounce. But below it, we're coming back down to the this 213, 212, and if it enters these boxes, we could see a deeper pullback towards the mid 200s. Google's given back all of yesterday's nice gains. Back into the box with a tag at the box low at 1630. It's amazing how this stuff works. Even in panic moments, the algos and traders, they see the levels and draw the line at these levels and bounce it. So just like all the other ones, if you're an active trader on Google, drop in your Fibonacci retracements. I would expect a bounce to fail and come back down for at least a double tap of 1630. So that wraps up this mid-session update. Stay calm. Keep your wits about you. Watch the levels. Drop in your fib retracements. Watch for a bounce that ultimately fails. Don't front run it. Wait for a rejection at a level or at a point where you can take an objective trade and set your stop just above. And then if it doesn't work, you're out with a paper cut. Don't short the low, short the bounce. I hope it helped, guys. This has been Chris Buss with Traders Profit Compass with a mid-session update. Have a good rest of the day of your trading. If I see anything significant, I'll certainly let you know. Talk to you soon.